Hello, Internet. Welcome, welcome, welcome. I got an amazing show for you today. Trading battle number 59 with two of the most amazing ladies you've ever seen. Mandi and Denise Shull. Both of them are traders and trading coaches. And I can't think of a better time to have both of them on the show today when pretty much everyone who's in the markets is going to need a huge amount of retail therapy today after a day we've had in the markets today. So, ladies, welcome to the show. Hi, Denise. Nice to have
Boris.
you on the show. Hi, and Mandi. Hi. How are you?
Hi, Boris.
So they're coming to us from the polar opposite ends of the world. Denise is in Idaho. Mandi is in Melbourne. And I'm of course in Jersey as always. There's nothing like Jersey to make you feel at home. So I'm very glad to have both of you ladies on the show today. Of course, is kind of a either a horrible or a great day, depending on which side of the market you're on. Equities sold off like 4% in just essentially a straight down decline. And one thing I kind of wanted to sort of ask Denise to start with. This is a time, where everybody starts to create doomsday memes on Twitter. If I'm looking at my Twitter feed today, it feels like everybody thinks it's the end of the world. We're going into a 1930 type of recession. Everything is ending. And the irony, of course, by the way, is that we couldn't have a stronger economy as far as jobs go. Like, in other words, there literally is no jobs to be found. But at the same time, we're also having this massive recession. Joe Weisenthal of Bloomberg put it, I think, brilliantly. He said we're having he called it a full employment recession, which is kind of what it feels like. Everybody's making money. Everybody's got money in the bank. Everybody's eating, but nobody's felt worse in their whole life. It just seems to be this incredible.
Yeah, that's about right.
Dichotomy between the two of us. And so, but the one thing that I find, which I find very amusing, is everybody starts to tweet doomsday tweets at this point. Like, everybody's convinced we're going to zero. This is the end of the world. And I wonder, you probably see this on your feed as well. Do you find that sort of do you find that as an interesting contrarian indicator? Do you sort of look at that and you go, you know what? It looks like we might be ready for a bounce. Everybody, because at the sort of this psychological positioning gets so skewed on that side. Do you ever look at Twitter like that?
That concept is, often an indicator. In the big picture, long time ago, but when the taxi drivers were buying internet stocks in 2020, right. It was like, okay, or 2000. So the concept. I had a client the other day say to me, this is an emerging markets guy, he has a newsletter guy who said, oh yeah, you should be long all emerging markets except for China. And my client's like, buy China. So there's always that kind of, if everybody's on one side of the boat, like, right, there starts to be an opportunity.
But I find that Twitter is kind of like the modern version of the shoeshine boy, because your sort of great insight into how human beings behave is that everything derived from emotion, that there is no such thing as reason. In other words, we feel first, think second, if I could paraphrase your view of the world crudely. And I don't think, Twitter is kind of like this distillation of 1,000 points of emotion sometimes that I find kind of very interesting, and sometimes really useful, as a positioning indicator, including myself.
I probably don't follow the right people on Twitter for that, and I'm also, because I'm not on there actively as it relates to trading per se. Right. I have a lot of traders who follow me and I'll talk about trading, but like I don't think I follow a ton of day traders. Right. And the ones I do are like former guys from the Mercantile Exchange. So, they're usually
they're going to be on the opposite side. They're usually
they're going to
be fading. Yes, because if you're a floor guy, you're always going to be on the opposite side of conventional wisdom. That's
right.
Natural positioning. Yeah. Mandi, how are you?
Really well, thanks, Boris. I had a really strong coffee.
There you go. Did you have a flat white, or was it a double espresso?
Yeah, double espresso, of course,
Okay.
Boris.
I'm giving honor to that side of the world. Um, I was going to ask you, Denise's view, which I think is really fascinating, is eye-opening for me, was that literally every human action is driven by emotion first, reason second. That we justify everything we do post factum, not pre factum, which explains, of course, the huge amount of human history at this point, including our own. And I wonder how you view, the power of emotion in the markets. And do you read it? Do you fade it? Do you use it to your own benefit? How do you examine that component of it?
Yeah, I'm totally with Denise on that topic. Like emotions is the driver for everything that we are doing. Now, funny enough, we humans, we think that it's our thinking that's driving what we are doing, and our
Yes.
doing that's driving what we are doing. So, and Denise, I'm sure you have the same experience because it's a human thing. People come to me and they say, "I want to change what I'm doing." I'm like, "Okay, that's great, but." The doing level is not where the answers lie, and this is what I love about your work so much, Denise. Um, Now I'm a trained coach, right? So when I see Denise working, my heart jumps because there is so much magic that Denise does behind the scenes that untrained people don't know about. And they wonder, like they go on the journey with Denise and they end up, out of the valley of the tears in the, meadows of the sunshine, and they wonder why. And this is when you see someone who's really skilled. And so, in terms of your question with the emotions and the markets, that's exactly the same thing where traders, they're so unconscious about their emotions and what's driving them. And that's what you see on Twitter, I think, Boris. That's the instant reaction to the day they had. And it's almost like they're venting, I feel, because
Oh,
they don't know how to deal with the emotions. It's just,
you're
building up
you
inside.
you're looking at him. And actually, I'm going to put Denise on the spot. I'm going to put myself on the couch
Yeah,
right now
show
because
some magic.
Oh,
I'm going to explain to you what happened to me today, which I think you'll find amusing if nothing else. And everybody who's listening to me, I want you to start asking me questions, post up questions. You get Denise coaches multi-billion-dollar hedge funds. This is your one opportunity to ask her a whole bunch of questions that I'm sure is on your mind. So post them up. I'll see if I can weave them into our show today, because this is really a rare opportunity to truly pick the brain of somebody who's an incredibly skilled trading coach and a former trader herself.
thank you.
But here's what I want to ask you. So here's my story today, which is I'm sure you'll find amusing. So I run a chat room, right? And I have a very, very, very good trading system. Trades. We trade primarily. We don't trade the S&P because most of our customers are international, and you might find this. Everybody who trades US finds this really amusing. Um, Most people who trade stock indices outside of the US, they trade them through CFDs, which are kind of
Their contract
like
for difference, but I don't remember all the details.
Right. But they're effectively there is no real difference between them and futures. They're just synthetic instruments that express price with leverage. It's their exact same thing. However, the primary CFD that everybody trades outside of the US is actually the Dow, which I know is hilarious to anybody who's a US trader, because in the US everybody trades the S&P. But there's a couple of reasons. One, the Dow obviously is 30,000 points. So, and because they're trading it per point, the amount, it's 1,000 point range. I trade the Dow on the CFDs because it's amazingly profitable because of the range point, right? So we trade basically the Dow and NASDAQ, right? Instead of S&P and NASDAQ, which is what people trade stateside. And when I trade US futures, obviously I'm trading S&P and NASDAQ. But anyways, so I have a great system. We're trading it well. It's kind of like a incredibly small reward, very, very high risk. It sort of scales up to large risk, small risk. Ultimately it's a huge risk reward reverse. So I have to be accurate 99% of the time, right? Which I am, because The system is really well qualified. I have a huge amount of statistical confidence in it. I have enormous amount of empirical confidence in it. I trade primarily from the long side because I'm sure you noticed, but like if you look at statistically, the U.S. stock market, not any other stock market in the world, but the U.S. stock market, from any random point, from like 1945, 75%, 75%, 75%. From pick any random day, 75%. If you look at up-down days, especially last 3 years, it's a 60-40 bet. I mean, if you were just randomly betting and you give them a 60-40 bet, you're an idiot not to get long, right? So, I'm trading long. Here's the bottom line. Because everybody in my room is a trading junkie and they want more and more ideas, I'm forced occasionally to have to trade gold and oil, which I despise. Like I really, really understand the equity markets. I have a good idea macro-wise on the oil market. Like, I sort of understand. I actually wrote a really good tweet 2 days ago saying, listen, it looks like the Russians are actually maybe looking to negotiate a deal that's going to be very negative oil. I wrote this 115, right? But my system is all about buying the bottoms, selling the tops. So oil is selling off today. Now my macro view is I should be short oil, but because my systematic view is, we're kind of at the lows, I should be dipping my toe and buying it. And I really don't want to do it, but everybody's like, looking for new trades. So I force myself into this stupid trade. Bottom line is I make 22 trades from the long side on equities, all winning. I close out every single position winning. I have one oil trade that I get myself into, and it just goes, I get stopped out, I get bigger, and it's blowing through all my risk parameters, blowing through all my system parameters, and I go into what I call my Tony Montana mode, which is I wrote this column like maybe 12 years ago. Still the most popular thing I've ever written in my life. I call it "Don't Trade Like Tony Montana," which is where I say everybody who is on the wrong side of the market gets into that mode where that scene where he's got his machine gun and he goes, "Say hello to my little toy," and he starts strafing everybody before he himself is blown up by all of the the guys that attack his house. Well, that's literally me. It's me trying to take on the market before I get blown out. Somewhere at around 4:00 in the afternoon, sanity finally takes over me. But I basically blew up a month's worth of work unnecessarily. I'm pissed beyond belief at this point, at this. But I fully understand why I did it. I did it because I was in a market that I shouldn't have been in, and I fought it out of just sheer pride. But I'm just curious your reaction to what you think happened there.
Well, let's start at the beginning. I mean, I heard two things. Number one, you actually didn't even want to do it.
Yes, I didn't want to do it. Yes.
And it doesn't sound like you had any real intuition about it. And by that, I mean any actual unconscious or physical pattern recognition based on your vast expertise and love for the speed and rhythm of the oil market.
Right.
In fact, my
fund of view is the exact opposite. My fund of view is it's going lower, it's short, because the Russians are going to make a deal, and we're going to start.
So not only did you, so you didn't really want to do it, you didn't have a good feel for it,
right.
And you had a bigger picture view that was in conflict.
Yes.
Right? There wasn't a chance you make money on that trade.
No, there wasn't.
But because there's so many different feelings going on there, just even the resentment of not wanting to do it, is going to mess with your feel about it.
Ooh,
but you also don't have a feel about it. You were a little bit like snowboarding instead of skiing, if you were me. Yeah, you kind of sort of know how to do it, but
you don't really want to do it.
Well, you don't really have the same feel for it.
Right.
And then you were fighting yourself. So this was like a risk management thing in terms of it is really true that we're always behaving out of what we feel, but also what we expect to feel. But you had a lot of feelings going on there that were in a battle. That made it impossible for you to, even with all your expertise, develop a feel for the actual speed and rhythm. If you had nothing else, if for whatever reason you were in a really good mood and somehow you felt like you had a good read on oil, you probably could have traded oil okay. Maybe even despite your big picture view. It's hard to fight yourself on those bigger picture views, but you might have been able to do it without those other two feelings, like, making noise.
Yes. So the question is, why didn't I step away from it? Why didn't I, why did I keep fighting? Well, I kept losing, I kept fighting, kept losing money, trying to prove who, I don't know, trying to prove to me, to everybody else, that I was right when I was wrong. I mean, why didn't I have the cold? I have a cold precision in equities where it's not working. I'm stepping away because I know it's, I understand that market well, and I understand what's going on. Here, I wasn't focused on the market. I was just focused on fighting
what you wanted to happen for you.
Right.
So one of the ways I try to help people sort out their feelings and emotions is like, is the feeling and emotion about the market, or is it about you? Because if it's about you, it probably ain't making money.
Right. It was 100% me.
Yeah. So
and that's actually very interesting. That's a really interesting question to ask. Is what I am feeling right now my view on the market, or what am I feeling about my view of my own validation? Am I trying to validate my own ego, or do I genuinely think this market has a chance? Because the thing that, and I think I was going to ask you, the other question is, do you think that emotional confidence is built through experimental competence? Like, if you contrast my trading in equities, I know that market cold both from price action and statistical action. Like, I know statistics are going to back me up. I understand how price action works. I really understand that, that even in the worst of the dark times of the equity market, there's always short covering that's happening, and even occasionally, sometimes you're going to run through all my levels and fine, I'm going to get blown out. But I know that's going to be like a 1 out of a 3 to 400 event risk. And if that happens, then I'm happy to step away because I understand that's statistically reasonable. But I don't have all of that confidence, with oil or gold.
So like you listed all these statistical things there, and the average person would say, okay, Boris has all that probability knowledge, and that's why he's able to do it. But the most important thing you said was in the very first sentence. You said, I know. And so, like, define know. Like, what does it mean to know? It doesn't just mean that you know those statistics. It means that you feel, i.e., you have confidence that those statistics will most likely create X outcome. And even if they don't on this trade, they will on the next trade, or over the course of 10 trades today, it'll be fine.
Right.
Like, we'll talk about deliberate practice in some realms, or, an athlete learning something. Why do you do that? You learn the technical piece of whatever it is, trading or skiing. But what happens? You develop a feel for something, and in that feel is the confidence that you can execute in that arena.
So that brings me.
When you said I know, that was the difference. You know that you know in equities. You also know that you don't know in oil.
What did you call it? Deliberate practice? Is that what you called it?
Yeah, that's a word that like a cognitive psychologist might use, or that will use.
Okay, but in the trading realm, right?
Mm-hmm.
So one way I know what I do is because I literally, and obviously I have all the software, all this stuff journaled for me. And by the way, just everybody who is listening to me, you really do not need to manually journal any of your trades. There's 1,000 pieces of software that will journal your trades. I'm the laziest person in the world. I'm a huge believer. Everything I do is automated because, one, I have the worst habits, the least amount of like clerical attention to detail span and everything else. So the beauty of living life now is that you really don't have to do any of this boring clerical stuff, but you can still have all the analytics behind you. But what I was going to say to you is one of the reasons why I know is because I've literally done probably 3,000 trades, maybe 4,000 trades since the start of the year, much less, and then there's been like another year prior to that of experimentation. So when you talk about deliberate practice, that is where my knowledge comes from. It's just from, it's like I remember you talking about like how, athletes practice their putt, or what is it, Stefan, who's the guy who does for the Golden Gate, the guy who's like an amazing 3-point shooter.
Steph Curry.
Yeah, Steph Curry. I think he does like 500 shots before the game every single, just muscle memory. And would you say that that's, if you are to be successful at trading, you need the similar type of process of doing over the same idea over and over and over again until you are comfortable with the process?
Well, on one hand, you need to know what it is, like what your system is.
Right.
But the more important thing is you have to believe it.
But I only believe it because I did it. Because I've only done it.
Whatever gets you to believing it, it doesn't matter.
Right. Yeah.
But you have to believe that it works. If you don't believe that it works, you'll jump from thing to thing. You'll change it up all the time.
Right.
So when you have a lot of experience in something, you have beliefs about how to execute in that arena, whatever it is. Sorry, I'm about to sneeze. Right. But people don't take, and I bet you Mandi can speak to this, they don't take the experience of having a belief. And what does that mean? And what does it feel like to have confidence, and analyze that as a thing? It's too ephemeral or too, mysterious. They don't think they can capture it. I mean, yes, I'm just going to say this and then I'll stop. But yesterday I tweeted, all decisions are risk decisions. And, some people sort of started debating me. Well, I have an underlying reason for doing that, because I think if people understand that deciding where to go tonight for dinner, which restaurant to choose, is a form of a risk decision, they can start to be more aware of the feelings they have around risk, even for something that seems really simple. And if you can start to develop the feelings you have around risk for, am I going to take the highway or the back roads based on traffic or whatever, you can start to realize you have these beliefs, these feelings about something that's a choice. But no one works with this dimension in any sort of, well, not no one, but almost no one works with this dimension in any sort of organized way.
Mandi, what do you think about that? What do you think about the idea of, that I'm sort of trying to express, which is that I really did not have confidence in what I did until I did it 1,000 times. What do you think about the idea of that mindful buying the same moving average breakout pattern 1,000 frigging times, pretty much on the same condition? Now, mind you, by the way, I have to again put in a plug for automation. I have zero discipline and zero patience. So if I were to, I basically what I have is I have a concept. It's been codified. When the conditions meet themselves, I press the button and the computer does all the work, because I'm incapable of being disciplined at all in executing this stuff. But the point being is that watching the computer do this 1,000 times for me across a variety, of scenarios and everything else is what has given me the peace of mind to stick with the system, which is like what Denise was saying, that many, many times before I would be like, oh, this doesn't work. I did this 3 times, doesn't work. Goodbye. I'm going to do something else. I did this before, I would flit around all the time. So what do you think about this whole idea of forcibly making yourself do something 1,000 times before you actually really decide whether it's good or bad? Yeah. Mandi.
So I think there are 3 different topics that are collapsed in your question. So the first one, you said, I've practiced this trade 1,000 times and I am naturally impatient and ill-disciplined. That's 2 different topics to me. Right? So we can have someone who knows their methodology and strategy really well, and then something happens. I was working with a guy, he's an amazing trader, right? He makes 7 figures a year. And then he started going on tilt. This guy is, trading for 20 years. Why would he go on tilt? They're going through divorce, right? So it's an external impact that can affect our emotions and then our behavioral patterns. So I would look at those 2 a little bit in separation, and then also understand that one causes the other. Right? So of course,
no, I was going to clarify. I was just clarifying that I was saying that my personality flaws are incurable. So I am not, what I was saying is that the reason I was able to practice this thing 1,000 times was not because I was able to sit down myself and do it, because I created a piece of software.
Yeah, no, I understand. I understand. So there's a second part to this. What you did, and this is something where I see my traders or most traders fall over. Everybody's trying to be so perfect, and they don't want to make mistakes. They want to minimize their losses. Now, what you've done is you've said, this is naturally how I interact with the world and how can I manage myself. So I call that protective pessimism. And so this is kind of what Denise alluded to as well, right? So practice making decisions under risk and screwing up and then getting information that, that's the feedback loop. That doesn't work. So how can I do it better next time? Like I took this road, got stuck in traffic.
I'm laughing because I always joke around in my trading room that nobody could have invented this. No American could have invented the system that I have, because, people know that I was born in Russia. So, even though I'm obviously American and, nationalized and everything else, but I was born in Russia, which forever taints you as a East European. And if you understand the East European psyche, it's basically the world sucks and then you die. That's pretty much the whole philosophy of Eastern Europe. So my whole system is really based on the idea of permanent and perpetual failure, which is, I basically created literally 1,000 little fail-safe messages about the market is going to stop you out. You're going to do this. The market is going to stop you out. You're going to do this. You're going to, keep doing this. It's the exact opposite of oh, I'm going to take this one trade. It's going to make me $1 million because I'm an American and I'm an ever happy optimist. So when you said, was it positive pessimism? I'm I don't know if it's positive, but it's
protective pessimism.
Right. And that is literally my whole view towards life. My wife always laughs at me because I'm always taking the dark view of the world on any given chance. So
but it's the balance, right? Like if you're only positive, you're, it's not the reality. Like we use those seatbelt and we have airbags in the cars just in case something goes wrong. We have insurance just in case we have an accident. So what I think traders are missing out there is not only practicing their skill and finding out how to trade best, but also what you said, to look at, if that doesn't work out, how do I then react? Practicing taking your losses, practicing letting your profits run. So that is not being emphasized enough in the industry, in my opinion. But what you do is these are my weaknesses. Now, how do I work around them? It's awesome.
Right. Denise, I was going to ask you something. I don't know if that ever comes across in your work, but I would imagine you probably deal with people from across the world, not just Americans. You have lots of different nationalities. Do you find cultural differences an interesting differentiator, sort of an interesting input that sometimes can impact trading performance? That, the way people sort of culturally view the world sometimes is a way that you sort of maybe work with them depending on
I always think of it as how did this individual come to think they should navigate the world?
Right.
So that comes from, the first really 10 years of life. I mean, maybe 15 or 20, but really the core way comes from when you're pretty little. And that's a combination of it's everything about where you grew up and the things that happened and how people dealt with them and how people dealt with you. And so, your culture has a part of that. So of course.
Yeah. I find that really interesting because, being multicultural, I'm perhaps much more sensitive to it than other people because I don't take it for granted. But it was really interesting that I really realized that it doesn't matter how American I am, how much I love baseball, apple pie, and Chevrolet. The essence core of me, that the first 10 years is so formative that you're always going to go. Those are the emotional buttons that you're going to, work with.
I mean, the brain research really says we're always predicting what will happen vis-a-vis our safety, and we're doing it based on our past experience, and the most important past experience is your first 10 years. So by the way, I don't think it's necessarily completely in America. Yes, America is probably overall, or the United States of America. But my grandmother was a single mother in the depths of the Depression, and my dad had to get money that she made that day to buy lunch, and no matter how much stock he bought, he never lost that. He always assumed that was going away.
No, it's true. I mean, obviously, all the Depression babies and that whole generation had a complete different mindset than the boomers. That's really, really true. Absolutely.
But the important point for people listening is your own personal experience with risk and safety and how you learn to navigate like the risk of getting a good or bad grade, how your teacher would react, your parents would react, whoever would react, how you would, navigate the risk of getting home if you lived in a difficult neighborhood. Like that kind of thing is with you, and the market serves as a proxy for that. And you're going to react to the market in the same way you learn to react.
Right. This question is a perfect question actually for both of you, and I'll start with Denise and then to Marty, to Mandi. So if that's the case, if everybody is unique in their risk profile, and let's use me as a proxy, because I'm a person that trades from fear, not from greed. I always say I will never make $1 million, but I will never lose $1 million on a trade. I am like my wife. My wife is very funny. My wife is the exact opposite. She tweeted it was our 10th anniversary yesterday. So she was tweeting out on Twitter, and she was like, we actually get along really, really well, except for the days when things go badly. When I lose 35% and Boris loses 3.5%, you're a risk tolerance. My wife is a home run hitter, and I'm obviously bunting my way through life. But I know myself, and I know that is what I do, and I'm very, very comfortable, making $100 a trade, making 20 trades a day, instead of going for $20,000 per trade. And Anthony Cordelli, who's a friend of ours, Denise and I, is a buddy of mine too. He's the exact opposite. He's sort of like, he'll strangle risk when he has it, and he'll just press it, all in. He's an all-in trader. And I think that's, very interesting if you know so. So my question to you is, there is this mantra that everybody teaches, this cookie cutter mantra, which drives me nuts, which is, what is it? Cut your losses and make your profits run.
Let your profit run, yeah.
Let your profits run.
Yeah. Like this one fits all approach. And I wonder, how you feel about these kind of, homilies in trading that I think are really false.
Oh my God. We should do a project where we write them all down, like on some gargantuan blackboard, and then show how they cross each other off. Like part of the reason traders are so confused is there's all these pieces of, supposedly wonderful wisdom for the mental game of trading. And if you get them all in one place, like this one conflicts with that one, conflicts with that one. Like, you're like, what do I do now? But the first answer, is really, there's a zillion ways to do this. You got to pick the one that makes sense to you and stick with it, which is what you've done. Right? And when I first started, I was trading in this shop where there were all kinds of different styles. And I was confused, wait a minute, which is the right way to do this? I mean, I had somebody scalping for eights. I had a momentum guy. I had a risk ARB guy over here, stat ARB, I don't know, one of those ARB things. And I finally realized I was kind of a momentum. I could see momentum in an industry group. And that I needed to get somewhere where people were trading momentum. And so I left and went to Schoenfeld at the time, which was trading intraday momentum.
The ultimate.
And that still makes sense to me.
Right.
I'm sure.
And that's the thing. And that's the thing that I think is fascinating is people don't understand. It's like a poker player. It doesn't really matter what your cards are. The really great poker players play the table. They could have horrible hands and they can still walk away with a pot. And it's the same thing with the market. It doesn't the market was down 900,000 points today. I made 22 trades from the long side and won because
that's astonishing because today was a straight down day. I wasn't watching a 5-minute chart, but watching price action on my phone while I'm talking to people.
Right. But that's again, that's just because it makes sense to me. Just like there could be choppy markets, but if you're a momentum trader, you might be able to see momentum within one or two places that is that you could profit from. Mm-hmm. So Mandi, I was going to ask you, how do you what do you think about all of these trading maxims that are just I think they're more dangerous. They're in fact probably lost people more money than anything that any
Don't get me started. And I see that all the time where traders then come to me and they say certain things. And I'm like, where did you get that from? Or someone on Twitter tweeted and it's like, man, that's why you're stuck. Or, one guy posted, I lost, millions of dollars. And, if you lost money, don't worry about it. And it's like, why do you look for the guy who lost money? Look for the guy who makes money and learn how he does it. So, it's so much misinformation out there. But it's not a misinformation thought. It's people don't filter and think. They don't challenge their own thoughts. That saying from Wolf of Wall Street, or Leonardo DiCaprio is the better one. The reason why people are not successful is because they believe the bullshit stories that they tell themselves. And I see that a lot. And it's like, challenge your thoughts. Don't believe everything you tell yourself. I was working with a guy. He is in a drawdown. I said, so, okay, what stops you from pressing that button? Because he's like, I need to get out. I need to get out. And he said, well, then my P&L is going to look bad. He's a retail trader. And I said, who besides you and me is going to see your P&L? No one. So how does it matter? That's so challenge your thoughts. You see that as well, Denise, don't you?
Oh, well, yeah, I mean, imagined embarrassment is a big factor. You'll hear me talk about fear of future regret. It's really imagined embarrassment. And that's a
I
perfect
love
example.
that.
A perfect example.
Yeah.
Oh yeah, I suffer from it all day long. I'm like, I'm like the most exhibitionist trader in the world, because I'm trading live in front of tons of people, and I pretty much disclose all my positions on Twitter and everything else. And still, I suffer from what you just called it, imagined
embarrassment.
Imagined embarrassment. Yeah.
So that was going on in your oil trade today.
Right. Yeah, because everybody saw me there, so nobody was like, "Oh, you're a freaking idiot." They were like, "Oh, I'm so sorry, Boris." It's a really, really tough day. But I was like, "Oh, I'm not going to let this thing. I will not let this thing beat me. I will not let this thing beat me." And of course, it beat me because ultimately, you have to come to senses. But that's the ego. This is actually my other question. I was getting my sexist question of the day, because I was going to ask both of you. So I have both ladies. I know, as usual, I have like 90% guys, 10% women. Maybe these days it's more like 80% guys, 20% women. But I find, for the most part, not always, for the most part, women much better traders. They don't let. Is it testosterone? What is it? What is it about guys that Why is Melvin Capital folding shop today? I guess that's my big.
Are they folding shop? I didn't hear that.
Wow.
He's folding shop. Yeah, he's folding shop. He finally said, I can't do it anymore. I gave in. But I mean, is it testosterone? Is it just basically we're just wired to be horrible
that's you
traders?
generalizing women.
It's what was that, Mandi?
I said that's very generalizing women.
I am. It's a completely sexist question. All the women in my life, consider me to be a complete male chauvinist pig, so I fully own it. But my question is,
you're not. You always talk so nice about your wife. You're like the biggest sweetheart.
My wife, both my wife and my partner, who are, who's a woman too, are completely convinced, that I am that. But but of course, I work with women all the time. But my question is, I still find is it biological or cultural, or am I just making it up?
Well, this is what I've noticed. Men seem to get a little bit more involved in the competition to do better than the next guy.
Okay.
And there's actually some research with little boys in baseball, and how, if you're in the United States, or what baseball is like, someone will say, I can hit it to third base. And someone will say, I can hit it to the outfield. I can hit it a home run. I can hit it to Chicago. I can hit it to LA. I can hit it to Japan. And little boys will do this, and they are serious.
Yes.
Like little girls don't do that.
Mm.
Right.
And I've seen that in some of my clients. Like I had this one client, very involved, fundamental process, intending to hold long-short equity for 2 to 3 to 5 years. And then he'd go to a conference and he'd see his buddies that he was analysts with at another shop, and they all had their own shops then. And they were long just Tesla. And I'm just saying that off the top of my head. And he'd come back and buy Tesla before. And his analysts would be so mad because they'd done the fundamental research for the 3 year. But he just couldn't tolerate that his friend was in this other stock that was working.
Yeah, that's so true.
Women don't do that as much. Women are very competitive, but they don't do that as much, is my experience and observation.
Yeah, that's actually really, really true.
I mean, if you look at why Linda Rushkey is so successful, right?
Mm.
It's not because she's female. Like, don't ask her that question. She would be really annoyed with you. it's because she put in the work. Like I posted one of her webinars up from 2 weeks ago, where she shows exactly the work she's put in order to be so efficient as a trader. Hours and hours and hours and years of analysis and research and statistical. What does the market do during those times? And this is what Linda's strength is, right? She's like, in the morning, the market behaves differently in the afternoon. And here's my stats from 50 years of market
And she's
behavior.
been doing it for, I was going to say 40 years. Because I mean, like I studied her way back when I was first starting. You know.
Oh, yeah. You know, Linda was on the show, right? Linda was on Trader Fest with me twice, actually. And I haven't actually, I got to tell her this. The last time she was on, she just basically gave like literally a PhD. I just let her talk for 2 hours. I didn't even say a word. Let her talk for 2 hours. The thing was, she kind of revealed the whole personality of the market. And what I haven't even told her this yet, the system I trade now was born on that day. She was the one that gave me the whole idea to understand how the first half hour trades, why we do certain things, you know, where we hit the highs, where, you know, with the, you know, where the European closed, the European, all of these things just, and like she opened my eyes and I was like, holy cow, this really does go this way every single day. And if you just did this and this and this, you could really take advantage of it. And that was literally the germ of this system. It was 2 years ago that, you know, now is producing all this profit. So it's absolutely true. Yeah, I agree that, you know, she obviously puts in a lot of, but I guess, you know, my point was like Denise's point is so true that you get little boys on a playground. The first thing that they're going to do is competition. Little girls are going to be a lot more collaborative, you know, at that point, and just, you know, with each other.
But Denise, I'm wondering if you experience the same. I find women, or maybe it's the women that I attract, they doubt themselves so much. Like even if they're great traders, there's so much self-doubt, and that's what's standing in their way to tapping to their full potential, to say it, you know, so dramatic. Do you see that as well? Or,
I think that I mean, you know, most of my clients, well, really all of my clients at this point are professional portfolio managers. And so I have one female PM and I have one female analyst, and, you know, they've powered their way through, you know, they're both in their 40s. But I think young women, number one, they perceive it as a math game, and, you know, right, wrong, or indifferent, there's massive amounts of information that girls don't do as well as math, not because they can't, but because of kind of the socialization around it. You know, and they're often led to believe they can't really do it, or they can't do it as well as the boys. And so then they come into this thing and they think it's a math game, and they're sort of doubting their math skills. Again, not because they can't, but because more often than not been socialized. And also, I think there's also kind of a way the brain works, even for math. But by the way, if you say that a woman's brain is maybe slightly more social, that should be a really good thing for trading, because it's basically just a social perception game. You're predicting other people. So skills like empathy and the ability to read other people go a long way in the markets, because math is just a proxy for it. It's not the reality of it, right? But women aren't taught this. I mean, I'll tell this story really quickly. A hedge fund manager, 6 kids, oldest daughter in college, freshman, wants to talk to me about majoring in psychology. And I start talking to her about what she likes and what she's interested in. And I'm like, why isn't this girl going to be an analyst for her dad's hedge fund? Because she likes analyzing, not just an individual, but situations. And I start talking to her about what it takes to be an analyst working for her dad, and she didn't know. And he had a hedge fund her entire life.
Yeah.
Wow.
May I ask you, Denise, you know, my personal experience, and I'm not judging my parents, I love them, they did the best. But my mom always brought me up to be the sweet little girl, the nice one. And that worked really against me at the beginning of my trading career. And so I had to do a lot of work on myself. What are your thoughts on, I think, the roles work in terms of the roles we play in families and how parents bring boys and girls up differently, maybe?
Oh, totally. I mean, again, I'll go back to, you know, your experience of your first 10 years and how you are taught to and how you learn to navigate the world. Like you learn some system, You don't really think of it as a system, but you learn some system. This is how the world works, and this is how I operate in it. So for you, that was like, be the nice girl, make sure you make everybody feel good, and, you know, don't make anybody mad, right? And certainly don't take anything from anybody, God forbid. Like,
How did you know that?
you know,
Yeah.
so then when you're going to go like place a trade that's technically taking money from somewhere, you might like have some conflict about that.
Yeah,
But it's
and give it
always
right
like
back.
that. Yeah. I mean, the role we're taught to play in the family, the market just becomes that family.
That is so funny. I literally, that thought has never crossed my mind. Like the fact that you just said that was like, I was like, the fact taking money from somewhere, hell yes. That thought of like, oh, I'm going to be taking money away from somebody, literally never crossed my mind until you actually just said it.
Unless it was, damn it, I can't wait to take money from somebody.
Exactly.
Sure.
Right. I was just like, it's funny. I never even I couldn't even imagine thinking of it that way. I have one question from the audience I kind of want to ask you, and then I got to ask you. We're going to do a couple of trades because I'm so over time because this has been an interesting conversation. Question here is, what's the number one hurdle that traders face when they're trading, and it's obviously very hard to pin it down to one single thing, but if you were sort of to pinpoint to the most common point of failure that everybody kind of goes through, what would that be? And I'll let Denise think for a second. I'll ask Mandi because she's obviously dealt with a lot of common points of failure in her coaching career.
On all levels, from the retail trader to the hedge fund trader, I see that. And it's maybe also a question for Denise a little. What I find is, so I'm talking about retail traders mostly now. People who had a certain challenging upbringing, they have emotional stress. And when they have emotional stress, I'm wording it really badly, they can't think clearly. It's like their mind is foggy and they see a concept like, let's say, maths, but they really can't process the information. And as they, release maybe traumatic events or grow up and learn to navigate the world in a more powerful way, don't feel helpless anymore, they are able to think more clearly. And that is helping them to read the markets more clearly. So on the flip side, someone said to me, well, what would you say? Is mindset more important or skill set more important? Why wouldn't you start with learning trading the markets first? And I said to him, and I would love your input in that, Denise. I said to him, when you have emotional stress and your brain is foggy, you can get the best trading system in the world. You will never make it work. So, we have the saying, in the hands of a powerful mind, any trading system will do. In the hands in a stressed mind or traumatized mind, no system will work. So,
but that's the hardest part in trading to me. We all know we're in stress. I know I'm screaming at the screen. The moment where I want to punch the screen, I know I'm at a point, and it's rare. I mean, it's been really that hasn't happened to me in like 6 months. Today was the first day in like 6 months, maybe even a year, that that I've gotten to the point where I was really I was bunching up my fist.
So what you're talking about is situational stress, Boris.
No, what I'm saying is walking. We all know we get to that point. The hard part, the really hard part, which I still struggle with, is how do you walk away? How do you say, you are out of control, my friend? You got to walk away. You got to step away. It's really hard for us to pull ourselves out, even though we know we're failing. We know we're sinking. We know we're drowning, and we don't. We continue to flop around. We don't. Stop. Like, how do we stop?
That's where high level of self-awareness comes in. So the best time to stop is when you feel those feelings creeping up. And then you're like, oh boy, I'm now at risk of doing something stupid, right? I call that critical moments. There's, I think Viktor Frankl used that term. There's between stimulus and response, there's like 5 seconds. You want to be so self-aware that you already really realize what your stimulus is. Now, I work with that on emotional level. I know really when I start feeling cranky and stressed or angry and, want to revenge trade. I feel that well before I'm out of control. And I also know what circumstances take me there. So I know when I have been in a trade, I was in a good profit. and then I gave a good chunk of my profits back because I didn't react quick enough for whatever reason, then I'm at risk of going on tilt or letting maybe my losses run. So I also look at my behavior. What's the trigger for going on tilt? So what happened before that? Now, when I have a list, when I'm really clear on, in these circumstances, I tend to do stupid things, right? Now I can be proactive and say, so now I have a trade. I was in a really good profit. I didn't manage it well. I know that if I'm not careful, I'm going to go on tilt. I'm going to be out of control, whatever that looks like in my trading. So that would be my approach, just to begin with. And then, of course, the emotional work that Denise is talking about on top of that, or together.
Denise, how do I stop drowning?
You learn to answer this question accurately, and that is, what am I feeling? Got to get the answer right, and why? And you got to get that answer right, and it's not going to be the obvious. So what's happening is there are feelings underneath what seem like the frustration of the market not doing what you want. Then there's like a prediction about what that means. And then there's a feeling about, if that prediction came true, what that would mean. And when you get to the bottom of it, i.e. what and why, like the intensity of it goes away. And your need to act it out stops, or at least is way mitigated. But even putting it into your process, like if you go, okay, I'm starting to get agitated, like what is this really about and why? Okay, then you start to learn, to Mandi's point, like what your patterns are. Like, okay, maybe I'm afraid of, looking stupid. And okay, well, I could probably tolerate looking stupid but what it would really mean if I were stupid? Well, if I were stupid, it might mean that, and it's that thing down below in the what and the why that's really causing you to act. So that's why your head's going, well, Boris, stop. But that feeling down 3 levels, or 4 levels, right, or whatever, is some sort of survival threat. I know that sounds crazy, but it is. And your brain is going to cause you to react to that unless you expose it to the light of day. And when you expose it to the light of day, then your here and now cognition kicks in. You can go, okay, well, maybe I'll lose a bunch of money on this oil trade, but it's probably not the end of my trading career, which may have been, because we do this crazy catastrophizing.
Yeah.
So Boris, what was it for you? I'm curious. So if you were to answer Denise's questions.
Sorry, what?
I would guess he can't really answer them.
What was, no,
in real time.
What was really interesting is the very question of, why am I predicting this? I am a person who leaps before he looks, always. And so, I already have a process. I just, it's falling. It's at the day's lows. I don't ask myself, why am I making this continuous trade? I'm sort of in the flow of my system's automating a trade. I'm assuming my stop. And if I had stopped today, in the middle of this frigging bloodbath that was oil to the long side, and just simply ask myself, why am I predicting, in these conditions right now, this particular act? It probably would have slowed me down. It would have maybe even jarred me out of my need to survive. Just the very act of observing what I'm doing, instead of, as I said, leaping before I look, because it's so much of my stuff is kind of behaviorally assumed. And I think probably a lot of traders who trade for a long time, they don't even articulate the reasons for their trades, right? Because they're all kind of internalized. They've been doing the same thing for 1,000 times already. It's kind of internalized. You have your own shorthand language, but that's a very dangerous language, because if you don't articulate, each moment is unique, and if you don't articulate that, that language, the assumption you're making is very often very false. Your analysis is based upon kind of a general reading instead of a very specific reading.
The ability to put things into words, particularly put your feelings into words, is a superpower.
Yeah.
And academically, it's literally called emotion differentiation and emotion granularity. And there's actual research on both traders and portfolio managers that the more they can put all of their feelings into words, the more money they make.
Do you find they can do this work on their own, or do they really need someone to help them bring that out within them and to language that?
Over the almost 20 years I've been doing this, it's like, I think it's obvious. It helps to have someone help you do it. Particularly, people are defended and they don't really want to know, and they don't know how to find their feelings and whatnot. But I have actually seen across the spectrum, like some people will hear that and they'll go run with it, and other people need a lot of help, right? Depending on what their background was in terms of putting feelings into words.
Interesting. Ladies, I'm running out of time and I cannot let you go without doing some trades. So I'm going to ask Denise first. I'm going to, let's see if I can share my screen. I'm going to take us to, well, this is going to be NASDAQ, but we can look at the S&P. Would you like to look at the S&P, Denise?
Well, we can look at it, but I remember what we looked at actually from before we started. But if I saw like a 5-minute chart of it, I wouldn't. Although we're way into after hours, right?
Yeah, this is 1800 hours New York, right? And now it's 2000. So it's about 2 hours into the night session in Chicago. We're obviously plumbing the lows. Market sucked. I mean, I could have told you this before we started the show that we're gonna hit the lows. But I mean, we're probing the lows, and and I'm just wondering, reading the chart, looking at what you're looking at right now, how you feeling? Like what would you, if I put a gun to your head, what would you like to do here? Do you think we have some continuity here? Would you like to fade it?
Well, here's the funny thing. Before we talked, I said I'd put a short up there at that 39. Wait a minute.
It was at 39.30.
39.29.
Yeah.
30.
Never got there. Never got there.
Right. Yeah. My intuition now is that I'd probably get long somewhere around here with a pretty wide stop. For something to like.
I agree with you.
39.80.
We broke the round number, 3,900, right? So they're gonna play around with it. Maybe they'll test it to the downside. So we're gonna put Denise on the mark as getting.
I'll go long wherever it is right now.
Right. With what's a reasonable stop for you?
Well, in this case, I always think of stops in terms of average true range and in terms of what I'm trying to make. So, I'd be looking to make 60, 70, 80 S&P points on this. So I put, I'll risk 18.
Okay. All right. So we'll probably let's mark you down to even 20, around 38.80. Let's see if that'll be actually interesting to see if Asia kind of sells out, or in a less in a more coarse trading language pukes out the last of the
38 76.50.
38.76.50. Why is that? I'm like fascinated.
Well, I don't want to be too close. I don't want to be too close to that 20 number. The
you don't want to be a round number, right?
And I know there's a lot of flutter in this. So
right. Yeah. No, I mean, they're definitely pressing it. Now I want to ask you, like, we didn't get really a chance to talk much about technique, but assuming you're in this trade, would you, let's say it bounces, 15 points up, 39.15. Would you give up a little bit? Would you take some profits here?
Yeah, I was taught to scale in and scale out at Schoenfeld, and sitting next to Dmitry Balyazny, who way back then was like a master of scaling in and scaling out. I mean, he's got like a $10 billion hedge fund, and I haven't talked to him in 25 years, so I don't know if he still does, but I definitely like buy a little, see what it does, maybe sell a little, buy a little more, like, in and out a little bit till you get that feeling that now it's going to go.
Right. I was just rereading Mark Douglas the other day, because I'm actually trying to construct a trading tool based on his idea was fascinating. He was basically, if Mark Douglas was doing this trade, he'd be buying here. He'd do 3 tranches. He'd do a tranche like 5 points up, just basically because he was, and then so take some risk off the table, but keep the stop. Like, this was interesting. The first third, he'd keep his original stop. So even if the thing goes against him, he would be stopped out, but for much less risk, right? And then if the second tranche, moved like 1 or 2 times his risk, he would give, he'd take that and then move the stop to break even, and then he'd try to milk the third tranche out.
Yeah.
I thought that was like
I
really,
didn't.
really interesting.
I probably knew way back when that Mark did that, but I'd forgotten that.
Right.
But I definitely tried to do the same thing. I don't do it so much now that I swing trade. Although I will tell you this, this is true.
Yeah.
My husband and I did go long bonds a little teensy bit yesterday as a start to step into that trade. And today I looked at the tape on CNBC and I was like, wait, TLT's up $2.25. I was like, that's the trade we did. Of course, wishing I'd put it more on, but.
Yeah, you never have enough of your good ones, right? You never have too little of your bad ones. That's always
fiddling with it, though. Like testing the market. I mean, I didn't understand that when I first started trading. Like seeing these traders throw out 100 shares to see how fast it was taken, or like or reading the bid and offer quantity as backwards. Like there were all these things that I didn't get at first, but.
Right. Interesting.
Yeah, Damon, Linda's husband, he used to execute for Paul Tudor Jones from time to time. And he told me as well, Paul Tudor Jones would do that. He would give him orders to test the market. But he would do that with different brokers, not just with one. And then place his real trades. Yeah.
If I saw your chart, I'm making money.
You are.
You are.
You bought the round number. I was with you. I'd be all over this trade. I mean, I'd be on the 1 minute, but like this chart actually, if you're interested, kind of a little bit of my setup for those of you guys who are watching. So this is just RS. The red stripe here is just short-term RSI.
We can't see your chart. We can't see your chart. There it is. Again.
You see my chart?
Yeah.
So we have a red stripe over sold conditions. We're hitting the nighttime session lows. We're bouncing off of it. So it's all very healthy conditions for a potential bounce trade, which is the name of my setup. So Denise and I are spirit animals in this
bounce buddies.
Yeah, bounce buddies, exactly. So let me let's talk to Mandi. I know Mandi is the Daxi queen. She loves the sexy Daxi. Daxi is not trading right now because it's it's closed. But maybe you can share with us the trade that you would be willing to do, or maybe on a longer term basis that that you like. Yeah. Let us know. Let's take a look at your screen and your charts. Go ahead. Let's see if.
By the way, my recollection, the DAX
is
darn hard.
Was that?
The DAX is darn hard.
Oh, it is really hard. I don't know how. I see, like this is a perfect example. I could never trade the DAX. It's insane. But Mandi is very comfortable trading it. It's just a perfect example of each trader knowing their instrument really well.
Yeah, I don't know. I just have a feel for the DAX. Now, funny enough, I also trade the Dow. I trade the Dow because I can't calculate the risk on the ES well enough. It's too complicated for me with all the little ticks.
See, I told you, Denise, everybody trades the Dow outside of America.
Yeah.
I traded the Dow. When I was really actively trading futures, I traded the Dow.
Yeah. No, I love it. I trade Dow futures here too. So what do you think?
Do you see my screen now? Or?
Mm-hmm.
Yeah, I do.
Okay, cool.
Yeah.
I'm going to do a Boris special and simply short that oil.
Oh my goodness.
Sorry.
Okay. That's okay.
Sorry,
so
Boris.
You know what? You know what? It's probably good. It's probably going to go to 105 before it finally finds even a modicum of support. So good for you. I like both of these trades. By the way, they're actually complementary. Short oil is positive risk, positive equities. So if one works, it's very likely the other will work. Maybe both of you guys, will be even tied and will be able to give money to both charities.
That would be so beautiful.
That would be perfect, right?
Yeah.
So actually, we're coming up to the end of our hour. And we're actually over our hour, but I want to just spend a couple of minutes asking each one of you a little bit about what you do, and then the charity that you guys are trading for. So we'll start with Mandi, since you're on the screen. By the way, I love that painting. That is an awesome looking painting.
Oh, thank you.
Very cool. That's,
yeah.
So tell us a little bit about what you do. People can find you, and also what charity you're trading for.
Yeah. So I I trade obviously, and do also coaching, trader coaching. I've scaled it back a little because the markets are so good. I want to make the most out of it. Markets are really suited to my personality and to my style of trading. And I know there will be months after that where it doesn't suit my trading as well. And then, I emphasize coaching a little bit more. Plus, I'm going traveling most probably June, July. So Gesundheit. So the charity that I chose is a charity that an amazing trader, Anna Nessa, she used to be a female trader on Twitter, and I think she's using her name now as a Twitter handle. And so she's also Russian heritage, and she has the charity called Forgotten Animals, where she is rescuing dogs from the streets in Russia, and she rescued tigers and bears, and I completely have the biggest respect for Anna. She's also really amazing human being. So I wanted to support her charity as well.
Very
And I love
nice.
animals.
Very
Yeah.
nice. Wonderful. Wonderful. And Denise, how about you? Can you tell us a little bit about what you do? And where
Sure.
people
The
can
first
find
thing
you?
I got to say, though, Mandi, is we need to put Anna in touch with Lindsay Jacobellis, the Olympic athlete who won a gold medal, who's part of the ReThink team, because she has an adopted dog from Russia, the Russian Olympics, that she wrote a book about called Sochi.
Wow.
Yeah. So they need to know each other.
This is crazy.
Yeah. My charity is the Felix Organization, which supports foster kids in New York. This is a near and dear to my heart because I was actually put in foster care when I was born.
Wow.
I was adopted out of it, 4 or 5 months into my life, but I always think about the kids who either didn't get adopted out of it or got put into foster home later. And I just like to do anything I can to help foster kids because
wow, that's amazing. That is really, really amazing.
And what do I do? What do I do?
The ReThink Group. Tell us a little bit about the ReThink Group.
Yeah. I have a risk consulting psychology consultancy. And we mostly work with portfolio managers and traders of all stripes. I mean, at this point, I personally am working mostly with professional portfolio managers, but I have a team, 2 former traders, one who was a floor trader at the Merck for 18 years, another one who ran portfolios in New York City, New Jersey. And we coach people.
New Jersey.
Yeah, no. Fair Hill. That's his street, not his town. But yeah, we coach people in the psychology of this crazy game, as well as we've got some professional athletes, and actually I have people in other fields too. Like I have a music producer, an art gallery owner that just want to make better risk decisions. Back to everything is a risk decision, using this neuroscience of how we really do make it, how we perceive things, and how we really make a decision.
Yeah. Do you find that? Sort of my final question of the day. Do you find that if you do this right, or if you do this well, you actually live a better life? Like I find myself that I'm, as I said to you, I'm utterly impatient. Zero. People who knew me 20 years ago, I would fly off the handle all the time. And the more I do this, the calmer I am. I make better decisions in other parts of my life. I don't react, instinctively like I'm going to strangle somebody the moment something goes wrong in whatever other part of my life, which I find really is actually an incredibly powerful side benefit of trading, for me.
This hasn't happened lately, but it has happened a handful of times in the 20 years I've been doing this, or whatever it is. I've had a client call me that I hadn't talked to in a while, and they're like, my wife told me I have to call Denise again because I'm too hard to get along with again. So,
yeah.
I'm sure you're probably getting a call from my wife soon if things don't get better. But yeah,
sounds like you have it together.
Yeah, no, we try. Anyways, ladies, it's been awesome. I wanted to thank you so much. The time just flew by. We got 2 good trades on. Everybody, hopefully watching us. Those trades we're gonna tally up about a week from now, and then everybody will email you the results. Anybody who's watching me, be sure to subscribe to the Trading Battle channel. As you can see, we bring you some of the best, most interesting content. And I cannot thank both of the ladies enough. It's been an amazing, amazing hour of super wonderful insights, not the least of which for me, as I monopolized everybody's time here, put myself on a therapy couch, and has been super valuable. I want to thank Denise. I want to thank Mandi. Ladies, thank you so much. This is Boris Schlossberg for the Trading Battle. Over and out, guys.
Thanks for having us.